Hello, I'm James Preston and welcome to another edition of Executive Corner Expert Talks, a special 20-minute roundup with Daniel Robert Foggo, the Chief Executive Officer and Executive Director of Plenti Group. Now, Plenti is an ASX-listed Fintech lender and was established in 2014. The company offers faster, fairer loans to Australians through innovation and their most recent technology aspects. Plenti's loan originations have grown consistently, supported by diversified loan products, distribution channels, and funding. Daniel founded the company following an esteemed career that saw him in directorship roles with the likes of FL Group, O'Sullivan Partners, and Barclays Capital, and he now joins us on Kalkine TV to give us an insight into Plenti. Daniel, a real pleasure to have you here today.
Thank you, James. Look forward to speaking.
Well, Daniel, first and foremost, congratulations on yet another record quarter. In the process, Plenti was able to reach a $1 billion loan origination run rate in June, and that shows that you're quite well poised to achieve a $1 billion loan book during this financial year. What would you say are the key catalysts for this exceptional performance?
Look, it has been an exceptional quarter. We grew our loan originations 140% above the same quarter last year, which at the time was a record. We grew our loan book by over 110% to $915 million. So, really pleasing. And really it was a story of market share gains. So what we were particularly pleased about in this latest quarter is that, two of our largest states were obviously in lockdown, Victoria and New South Wales, yet we continued to grow. We grew our originations 18% in the quarter, particularly strong origination growth in automotive finance. So despite the lockdowns, we were able to continue on our growth trajectory. You mentioned $1 billion. I think, other interesting milestones there during the quarter. So it was only in November last year that we as a business reached $1 billion of cumulative lending since we started lending in 2014. We're now lending on a run rate basis based on the last quarter, $1 billion a year. And we do expect to reach a $1 billion loan book before Christmas. And in fact, in our quarterly update, we brought forward the timing for both reaching a $1 billion loan book and also reaching cash impact profitability.
Yeah, it's incredible figures. On a mental capacity there, how much of crossing that threshold, the $1 billion mark, does that do something for you personally when you look at how the business has grown? Do you think, wow, we finally achieved this milestone?
Look, absolutely. I think coupled with getting to cash impact profitability, obviously we've suggested they'll be achieved in the same quarter. It really shows that we're building a business that's here for the long term, a long-term sustainable business, at cash impact positivity, and also putting some distance between us and other lending businesses. So showing that our business is a business that will continue to endure and take market share from some of the large incumbents, and we'll build a real legacy, or that's absolutely our plan.
Absolutely. Now, recently, Plenti's inaugural ABS issuance attracted quite a strong demand from investors across all classes of notes. Now, it seems to have substantially reduced the company's funding costs. In which other ways is this a strategic achievement for the group, do you think?
We started our life as a marketplace lending business, or a peer-to-peer lending business. We've very deliberately diversified our funding over time. And the latest milestone in that regard was our ABS issue. We securitized just over $300 million of automotive loans. We reduced our funding costs whilst doing so by over 1% over those loans. So really quite significant savings in terms of our funding cost. And really pleasing to see Moody's, which is obviously a rating agency, rate around 88% of those receivables as AAA risk, so really low risk, which really validated from a third-party perspective, I think, the types of customers we're funding and the credit quality of our loan book. So great milestone for the business in both lowering funding costs and again showing that we're funding the right sorts of customers.
Well, that's exactly the point, isn't it? You don't want to be lending out to people that simply can't pay it back or don't have any intuition in terms of how the process works. Now, another thing that we need to look at as the renewable market seems to continue to grow faster and faster. And as part of that, there's a lot of financial assistance for green energy that is easily available and vice versa. Why do you think the renewable market should be given utmost priority at the moment?
Look, I think as a business, we absolutely believe in, Australia's clean energy future. We've prioritised this from 2017 when we entered the household renewable energy market or renewable energy finance market. We started with funding support from the government's Clean Energy Bank, the CEFC. So it's a key priority for our business. It represents around 10% of our monthly originations at the moment, but we see a great opportunity for that to expand over time. So you mentioned subsidies. We actually run 2 government programs, one in South Australia, one in New South Wales, a pilot for what is potentially going to be a very large program where we're helping people buy solar panels and home batteries with government support. So we really see ourselves as having an important role in increasing the uptake, particularly of home batteries. At the moment, about a quarter of households in Australia have solar panels on their roof. That can obviously increase, but actually a very low percentage have home batteries. We're here to help people put batteries in their home, which obviously reduces their power costs, improves grid stability, and also helps our environment.
Well, look, with the economy opening back up as well from nearly 4 months of lockdown, how would you say the fintech sector is placed to capitalise on those opportunities, and does Plenti have a unique edge in that regard?
Look, I think absolutely we've seen a decline in market share from the big 4 banks in the personal and automotive loan markets over recent years. Actually, when we launched in 2014, the banks had in the personal loan market around 90% market share. That's declined really significantly year on year since we launched. And I think COVID's accelerated that trend. So the beneficiaries there are fintech businesses like Plenti. We're rapidly gaining market share. And really that's driven by the ability for businesses like Plenti to deliver a better customer experience. When you deliver a better experience, you integrate more deeply with your referral partners. It means we're more relevant, easier to work with, and that's really what is driving our success and scale.
Well, look, it's quite an overcrowded marketplace at this point too, with the likes of Afterpay and Zipco. But how would you say that Plenti's buy now, pay later offering is better than those type of players and other ones that are in the market?
I think businesses like Afterpay obviously primarily focus on amounts of credit, typically under $200. Where we offer BNPL finance, which we launched at the start of this year and is growing very strongly, it's very specifically in the renewable energy, household finance market. That's a common form of finance in that market, and it's an appropriate form of finance and growing strongly. In fact, we only launched that in January this year, and it already accounts for over half of our loan originations in renewable energy. So I don't think it's necessarily competing against the likes of Afterpay, but it's certainly a really important part of why we're growing so strong in that space.
Absolutely. Now, as sinusoidal trends continue and uncertainty prevails in the market, how does Plenti plan to achieve the financial priorities of growth, of profitability, and efficiency in the coming days, months, and even for the next year?
Well, look, I think fundamentally we've really got technology at our core. When we launched the business, it was about reinventing lending, making it better for the customer, and coupled with that, when you're using technology at your core, you have a lot of operational leverage in your business. So as you scale, obviously the economic metrics can be really quite attractive as you scale, and we've talked about that $1 billion loan book being a really important tipping point in that respect. Looking forward in terms of what drives our growth, we're in massive markets. The automotive market is about $40 billion of finance every year, much larger than the BNPL market. The personal loan market's really large, and similarly, renewable energy adds to that. So there's a very long runway of growth in the verticals we're in. We do continue to innovate though. So this year we launched BNPL finance and renewable energy. We broadened our target market in automotive finance through launching a commercial automotive loan. When we look forward, we see a really exciting opportunity to bring together the renewable energy and the automotive parts of our business. Clearly, electric vehicles are going to be an important part of the future of transport in Australia and the whole world. And as they are introduced to this market, the process for purchasing cars is obviously changing, becoming more digital, and that really plays into the hands of a business like ours, which is obviously a digital-first business. So we are, putting in a lot of effort to make sure we're a really important player in the EV financing market. So, watch this space. It's an exciting movements in the automotive market.
Obviously, there is a key focus from your perspective and from Plenti's for that matter to do with the EV space. One thing I've certainly noticed during COVID is that the price of all cars, particularly secondhand cars, has gone through the roof. Is there much of a crossover with Plenti in that respect in terms of financing pre-purchase vehicles?
We fund around 40% of the vehicles we fund are new vehicles, and 60% would be secondhand. We see the demand, obviously being very strong at the moment, and actually the supply's been reasonably robust. It's really just that the demand is outstripping the supply, partly because of supply constraints. So we see a prolonged period, at least the next 12 months, where we're going to continue to see that demand, elevated. People aren't wanting to get on public transport, et cetera, on the back of the pandemic we've just been through. And so that's very helpful from our perspective in terms of just making sure it's a really buoyant market that we're lending in. Importantly for us though, it's a growth story via gaining market share. So whether the end market is contracting like it did in the last quarter, we can still grow really strongly. We're just displacing a lot of the sort of large incumbents as we offer put a better offering in market.
Well, Daniel, just as we wrap up, is there anything further you'd like to share with our viewers and your investors?
I think, when you've got a business like ours that's got a lot of operational leverage in it, that's growing really strongly, is in really large markets, and is hitting sort of tipping points like we are now of reaching $1 billion loan book and cash NPAT profitability, hopefully it's, does grab investors' attention and hopefully they take the time to see what a business like ours looks like as it continues to grow scale.
Wonderful. Well, Daniel, thank you so much for your time today. It's been fantastic to hear your insights with Plenti.
Thank you very much for hosting me. I appreciate it, James.
Well, that's Daniel Foggo, the CEO, founder and executive director of Plenti Group. And if you missed any part of that interview, you can catch the whole thing on our YouTube channel, Kalkine Media. That's all for now. I'm James Preston for Kalkine.